Good morning and good day, traders. Another day, another webinar. Like every day, we have 5 days a week, 5 different traders. We will speak about trading layers, strategies, market screening, and maybe 1 or 2 questions of your side directly answered in our webinar. That is called real-time daily trading ideas. So let's have a nice start and let's have a watch to the markets. Of course, we will start all the time with the same, with a risk disclaimer. Forex and CFDs are leveraged products and can result in losses that exceed your deposits. If you're a starter, please start with a demo account and make yourself familiar with long trading, short trading, and your personal risk management. You can see the full risk disclaimer if you visit one of our web pages, for example, admiralmarkets.com. This is me. My name is Jens. My English is made in Germany. I'm calling from the Berlin office of Admiral Markets, but hopefully some of my quality is also made in Germany. But I'm not the main speaker. The main speakers are our day traders. On Monday, it's Jay's day. On Tuesday, it's Paul's day. On Wednesday, it's Mike's day. On Thursday, it's Leonard's day. And today is Friday. So Friday, it's Dirk's day. Our leading day traders live. Today's actions are tomorrow results. And of course, if you like to trade Forex and CFDs, we would be happy if you do it with Admiral Markets. You will get a lot of benefits only with us. For example, a typical spread of 0.8 points for our bestseller DAX 30 CFDs. You can trade also index CFDs with mini lots starting from 0.1 lots, and you have a choosable leverage. You can choose if the leverage should be 500 maximum or maybe just 10 or something between it. Many benefits you only get with us, not available at some competitors' brokers. Check it out at admiralmarkets.com, our webpage. There you will find also something about our regulatory background, and of course our contact details you will find there. You can call us, you can send us an email, or visit one of our other channels like YouTube channel or Facebook channels, all linked and informed at admiralmarkets.com. Enough from my side. Now it's time for Dirk. Hi. Good morning, good day, Dirk. What's your view to the markets? Let's go and rock and roll.
Yeah, good morning, Jens, and hopefully all you guys had a quite easy day so far. If you have a look at the past days, something like we should call so-called turmoil. The global stock markets, a lot of traders like us, we saw equities plunging down to hell. And if we have a look at, for example, the major indices like the Dow Jones or S&P 500, Nasdaq 100, so the 3 leading U.S. indices, they almost shut down a couple of thousand points. Right now, if we have a look at the DAX first, it's not easy to know where to start, but we just will start with the German DAX, and we will just place or just have an idea, for example, of a so-called short order, where we might place a short at this Fibonacci retracement. That's the 23.6 at 12,430s, for example. We gotta have a sell stop, for example, down the road, excuse me, up the road at the next Fibonacci tool, which would be something around the 12,550s. If you just screen it up, for example, use the tool, and you may see that, for example, you will see the so-called order ladder giving you the possibilities to see your so-called risk, and it's even printed in euros if you like that. So we don't go far up the road. The thing is, if you just, for example, have a stop loss between 100 150 euros, for example, for 2 lots, that's way okay. But the thing is, we can't have a look into your account because we don't know your account size. So that makes sense that you have the control about your own account size, and you will have the ability to maybe to calculate the position size and the position you wanna just risk. So one thing for sure, besides the DAX, we will have a look at the major markets, which they're so-called steering or guiding the German DAX as well. Just have a look at, for example, the Dow Jones. I already placed some Fibonacci retracements here. Just have a look that this one is set up right here. Okay, and just to minimize it a little bit, just to see the so-called possibilities to the downside as well. There are a couple of Fibonacci projections to the downside, 138.2, 161.8. So, for example, if you have a look at the current top of the record high, so 660s, I guess, something around that, to the downside and to the yesterday's close, you have something like a 10% drop right now. So this is 10% from, just for per definition, it would be something like, yeah, you just call it a correction. You still can call it a correction. Of course, the velocity, the extreme velocity of the positions going down, for example, like 2 days, like the 6th of February, or yesterday, more than 1,000 points down the road, is kind of shocking. Of course, it's explainable, because we saw a record outflows of the markets. So if you have a look, for example, at the US stock funds or at the US stock markets, we are way over 24, in direction 24 to 25 billion of outflows. So that makes sense. If you have a look at the Dow Jones, for example, or at other major indices like the S&P 500 or the NASDAQ 100. So what is going on with the technical view? Is there a so-called possibility of a rebound, or where could a rebound be leading to? I would say this is the 61.8 level, and this is approximately around this 24,550. So this would be possible to see a rebound up the road around this marker. It won't be surprised. I won't be surprised if we have a so-called rebound in the first half of the session, and maybe something happens and we just go down the road again. All possible. Everything is possible in this kind of market. But in the end, this market is technically very way oversold right now. So from the technical aspects, it could be much more of a risk reward to go long, going up for a couple of maybe 100 or 200 points and just leave it like that. Or of course, first half of your position just out, second half the position entry, stop loss to the entry. So something like we do usually when we start positioning, and we maybe exit a half of the position. So this is the Dow Jones stuff. I wanted to talk about a couple of markets we spoke last week. For example, just have a very short look at the bond future, which is still hovering around this 158 marker. This is the 161.8 level, which we talked about last week, and it's still around here, and possibly is a so-called make or break scenario, where the next level to the downside would be the 156 levels. And if we really see a so-called rebound, this may lead us to the 138.2, which is around the level of 158.90. So just to talk about in a couple of seconds. Next market is the Bitcoin, the Bitcoin US dollar. I'm not into fundamentals about Bitcoin and other cryptocurrencies, but just the technicals and the technical view. So we saw last week, we spoke about a couple of Fibonacci retracements and so-called levels where it could be interesting to go long. So we spoke about the 138.2 and the 161.8, which is around the 6805 level. As you can see from this daily candle to the downside, we saw an ascending trend line from the long-term scenarios, two ascending trend lines. The one is here, the other one is here. So right now we are just hovering around this one. If we get over that, the next one rebounding into the 61.8 level would be already a 10K level. So 10K 625 is the next level to go for Bitcoin, just on the technical aspects from a rebound perspective. If we go down the road, the next markers are again the 161.8 and the ascending trend line, which is around the 6K level. Next Fibonacci to the downside, just to mark that as well, just from the technical aspects, is the 261.8 level, which is already sub 3K. So just watch out, just have a look at this technical aspects, and be aware that, of course, this market is like the others, like the indices, from 1 second to another, maybe a market of high velocity. So we spoke about the US dollar index last week as well, and we spoke about a long scenario. And as we spoke about that, it went up the road. The 89 level is already way behind us, and we already broke up above the 90 level, which is right now a little bit of maybe stop marker around the 90 to 90.50 mark. Just mark that with the horizontal line as well. We are around this 90.50 with the highs, the latest highs here. So I think the next days to come and the next weeks to come, there could be some relief again, and we may drop back down the road to the 90 and 89.50 level. So that would mean that after a couple of 4-hour candles and after a couple of 2 or 3 daily candles, we will see Euro-US dollar as well going back up the road. So this is another pair where we started a short scenario this morning. The short scenario this morning opened a short at 122.75. The stop loss is at 123.25, so a 50 pip stop loss. Where are the targets? The targets is, as you can see, there is a blue box right here. This blue box is between the last low here. You got a low at 121.65. You got a low here at the 122.11, and on top of that you got the support at 122.07. The next support, the support 2 level, is more interesting. It's 121.67.9, so 68, and this corresponds with the latest low of this one here. And on top you got the EMA, the exponential moving average 50, at 121.30. So this is a combination of those three with a blue trading box where we could place, where we could see a target where Euro-US dollar is moving downwards. So this would be something like a couple of hours until a couple of days we see a level like this. After that you could place a rebound trade when we touch the 160, the 121.60s, for example, or even go a little bit lower around the support 3 here, and a little bit lower down the moving average 50 here, we could place another rebound trade for a long scenario. This makes sense so far. If you look at the low, no, excuse me, or the 2017 high, which is around here. Yeah, that's the old high of 2017. It's 120.92. Yeah, so that makes sense if you just draw that. I just draw that blue trading box as well, just to the very much right side here, and this would be something like a entry zone for a rebound trade, for a long trade, going from 120.90 to 121.20. So this is a long scenario, which will lead us to maybe the next or the old highs around the 125ers. There is one long scenario, one long Fibonacci. I will mark that as well, just that you will be aware of that, because of the long-term scenarios, a long-term Fibonacci around that 125.98. I just mark it with a horizontal line and delete that stuff again. 1 second. Need to be aware of that one. It's going to be, oh, excuse me, I got the wrong time numbers. Just wait, hold on a second. That's the wrong one. Of course, I forgot to place it here to the downside. Okay, so that's what I wanted to talk about. So this is the one, 125.98. So it's not a very corrective stuff. So it would be something like typing it, because I figured that stuff out already at 125.98. Okay, so I will delete this Fibonacci analysis here and just leave it like that for just marking that important Fibonacci level on the upside here. Okay, so this is something about Euro-US dollar. Another one is the Euro GBP right now, because it is some kind of new stuff again, and it's a little bit about interest rates. And we already heard Mark Carney, the Bank of England governor, Bank of England chief, if you say that like this, who spoke about the possible interest rate hikes in the coming month to go. And if we have a look, for example, at the current British data or Great Britain data, UK data, we saw, for example, that the production, the industrial production, went down 1.3%, for example, or we saw some balanced stuff, which is a little bit negative, first negative for the pound. So it might be on top, just because of it, it might be on top interesting to have the technical aspects, to see that current line here, the moving average, the 200 moving average on the daily basis, and this one is already fighting with it. And we just sell that trend line in combination with the 22.6 Fibonacci, which is at 0.8833. Okay, sometimes you just need a minute. The thing is, the stop loss right now is a little bit sub this 23.6 Fibonacci, which is already at 0.8827. So that's the current stop loss, 0.8827. It's very small. It's a very short stuff. It could be out in a minute, or stopped out in a minute, of course. But the danger is if you just skyrocket again back up to the 0.89 level, you would be down in a huge loss, and that's not a good thing to do right now in this kind of market. Okay. So I spoke about the euro, I spoke about Euro GBP, I spoke about the US dollar, short stuff about the Bitcoin technicals, about the bond future, about the DAX and the Dow Jones. Is there any question about, for example, some commodities or stuff like that, Jens?
No, but everybody is worrying or checking out the big volatility in the leading global indices like Dow, like DAX. So maybe a final 1 minute view again to the DAX. Where's the limit, up or down? And I already say thanks for today. Our webinar is daily, 5 days a week, 5 different traders. So on Monday, Jay's Day. Hope to see you soon. And if you are not able, because of your timing, to join every webinar, just visit a couple of hours later our YouTube channel, and you will find a recorded video there. So thanks from my side. Have a nice weekend already. And the last 1 or 2 minutes with Dirk and the DAX.
Okay, so first of all, just from the fundamental side, everybody reads a lot of stuff at the international media about, for example, the current coalition talks in Germany between the blacks and the reds. So far, everything what is written could be deleted because you never know what is happening with those social democrats. They are about to vote for the coalition or against it. So far as we will know definitely more when this takes place, and it will be taking place in direction March. So there will be a solution. There will be a final thing at around the beginning of March, as I know so far. So this would be something at 3rd or the 4th of March. So just for having a backup with that one. From the technical aspects, looking at the DAX, for example, all you know is that the DAX is guided by, for example, the US indices. So if the Dow is about to drop another 400 to 500, 600, 800 points today or the next week to come, the DAX will simply follow. The thing is, where this might be a little bit of a favor zone to go in and to go long again, to have maybe a long-term setup for a longer term, let's say a couple of days, for example. It might be interesting to see the last. Let me see if that works. No, that works on the weekly. We got a low around the 1146.3 and the 1186.9. So these are levels where you possibly place a more, let's say, a more long-term scenario for the DAX. That means that we are very close to that that candle right here from the 6th of February. So that might make sense just to place a horizontal line and to see where this comes from. It's the 100 Fibonacci, which is from the 29th of August, which was the very important low at that time. And this would be the same low, which is already tested here, and it would be another retest of that level. But it makes sense to have a rebound trade on that one. From the interest rates perspective, not only the DAX, but on the European markets, it makes sense just to explain it in a very short term. We still have low interest rates, 0 interest rates, and it doesn't look like we will hike them like, for example, the Bank of England does it in a couple of months, or we won't hike it like, for example, the Federal Reserve did it already and will do it this year. Maybe another hike in March, another hike in July, another hike in September. That's what they said so far. We won't see a hike in the from the European Central Bank, possibly not even a hike this year. So the first hike we might see is in 2019. So far from that kind of explanation, it would mean that interest rates remain low, and it would mean that, for example, European Eurozone equity markets would remain in a favor. So that would lead me to a conclusion to just simply buy the dip, the next bigger dip, and to have a rebound trade. Okay, from my side, of course, good trades, safe trades, and a relaxing weekend. And if you like, of course, you can watch all the webinars at YouTube. And on top of that, you can watch us the next week to come. Starts on Monday, 11 CET, goes up to Friday CET, where you might or will hear me again. Thank you very much.